Testing. Looks good. Sick dump before the close. Yeah, let's jump to it. Let's go ahead and jump into it. Happy Friday, everybody. Let's see. Yeah, in the futures chat on Discord, I was taking a look at the broader picture, which we're going to go into. But yeah, right here at the close, came all the way back down. Last few minutes is probably going to peg that morning low that's set up here on the news this morning. I think it was the PPI or something like that news that happened. But let's get into it. I want to spend a little extra time on crypto today. Had a thought come up this week as I was doing some live stream prep. And so we're going to talk about that. What I like to do in the beginning of this live stream, by the way, welcome, happy Friday, everybody, is take a look at the markets, stock market, crypto markets, the things that I'm looking at, the opportunities that I may be seeing coming up in the week ahead so that you can capitalize on them too. I stream this on TradingView. I stream this on YouTube and on Discord every Friday, the same time, 4 p.m. Eastern. So I hope you'll join in the future if you're catching it late. As always, if you are joining me live, post things in the chat if you want to take a look at them. Symbols. Tell me the symbol. We'll take a look at it. I'll give you my opinion. It's just my opinion. Disclaimer, I'm not soliciting to buy or sell anything. I don't sell courses. I don't want your money. I just love to talk about markets, and I'm a trader. And if I'm going to make money, it's going to be because I'm right or I'm wrong. And that's what I strive to be. And share in my love and give you guys the best live stream that I can for those people that want to come and listen to me chat about the markets and how I approach them. So that's my intro. As I was noting in the futures chat before I started the stream today, one of the things, let's just look at it from a top-down perspective. Okay, I clean up my trading lines from this week. So as a recap, one of the things that I've been watching all the way back from October, every Friday I talk about this, we have to assume that the market is bullish from this bottom that happened on the CPI print from October the 13th. That was where we had a spike down and then shot back up. We're looking at the ES, the S&P 500 mini futures. That was a key indicator that a bull rally was going to start, and we have slowly started trending up. Well, slowly, but it's been a pretty uptrend with some down moves along the way. Now, both the S&P 500 and the NASDAQ following that October 13th bottom have begun to top out. Let me clean this up a little bit and start over. So on the NASDAQ in particular, it's very apparent that we have from the high in August down to the low in October, we have this trend, this little bearish trend that brought us down from the summer into October. Last week was much better trading than this week. Last week, caught a couple of opportunities. I might look at, if we get some time, the opportunities this week that I didn't take that fit within some very strict rules that I have, but I just didn't like this week's price action. So I mostly just sat back and watched. But last week was very good because we hit that resistance on the NASDAQ right there on the 1st of December, December 1st, which I believe was the Thursday a week ago. And that was also, if you take a look at it here, a double top situation on the NASDAQ. So you had that resistance of the 50% of this downtrend for the better latter part of the year. And then you had a double top set up. You also had Jay Powell talking. That was this movement right here that brought you up to that resistance level. That was really key. And it topped out. You had a blow off top, the kind of thing that I like to see. I like to see it where it stops everybody out to the upside and then slams back down. There's actually a good little trade in Bitcoin this morning that I posted, and I am still in going into this weekend based upon that same thesis. It's the classic Bart Simpson pattern, but we'll talk about that in just a second. And so this week, as we come into it, the question is, what are we going to do at this level? What are we going to do? Are we going to come back to retest this level on the NASDAQ? Are we going to come back to retest that beginning of the month high on the S&P 500? Well, the answer is no. And we had a down move for last week and into this week, and then a slight bullish move up on some news. And today, well, the key thing today is that price came to this interim 50% level right here. Just basically the move down. Let's zoom in a little bit so we can see it. So from that, here is Jay Powell. Jay Powell running his mouth brought us up to this high, topped out with a little fake out, and then it sold off from here. Had some news in here that people can say moved it. Then we had a little gap up overnight here between the cash close and the futures open, and it held today at this level. I was looking for a trading opportunity here. We got this little move here at 8:30 on the PPI news, but it was too quick to take a short. And as you see, it came all the way back up and held that level. Didn't quite even touch it there again, but by the end of the day, price for this week, if we basically take this week's action into account, like this down move, it came up and held that key resistance. If it was going to be bullish, if I could go into this weekend saying that this is a sustained bullish trend, then we would have had a close above the 4,012. Let's call it 4,000 to make it nice and even on the ES. SPY, that's going to be SPY 400. So 400 on SPY, if that's what you prefer to look at, is really that key level that we failed to get above this week. And that makes me go into this weekend with the sentiment that this could be a pullback from this resistance. Now, one of the things I talked about last Friday when we had that Thursday high right there. Let's clean that up. One of the things that I talked about was the confluence of the S&P 500, the stock market, hitting a resistance level at the same time that the VIX volatility index level, that's my being sad that I thought if we broke this level, the good day trading opportunities of the year are going to start to fade, but VIX has actually come off of that key 20 level. 20 has sort of been the support that VIX has held all this year. And VIX is, of course, the measure of the implied volatility of SPY options. And so what that means is people are starting to price in more uncertainty, starting to price in more volatility in the market as we have this move down. So what that means together, when you see volatility reach a low, when price of the S&P 500 is at a resistance. So VIX volatility, implied volatility is at a low. Volatility is at a low. It is inverse typically to the price of the S&P 500. So when you have that confluence, that can set up for a really good trade. And one of the things that I was looking at was a potential just buying a put, because puts were supposedly cheap. The reason I didn't jump into that is because when I started looking at the actual volatility, let me pull this up in Thinkorswim really quickly here. Thinkorswim has the one thing that TradingView doesn't offer that I really, really want for options trading, and that is real-time or accurate day-by-day implied volatility data. And so I'm going to pull up a chart right here. On the top is the SPY, and on the bottom is the implied volatility. And so what you saw here as price was hitting that level on 12.1, down here below, I have it color-coded because I made this indicator myself. Volatility was still above this yellow line, which is average. So while I was expecting, because of VIX, for the options to be cheap, for it to present a very good risk-reward trade, that wasn't actually the case. And so I didn't take the trade. So if we go down, I'm going to miss it. But that was how my thought process was going on, was, that's interesting. Directionally speaking, you're going to get your marching orders from the price of SPY, and then the pricing of the options, which would make it a much better bet, would have been the volatility. But actually, the implied volatility was high. And earlier this week, a friend of mine jumped on the call who is kind of perma bearish with the stock market, and he was asking me what I thought about him putting out a put. And I said, well, interestingly enough, I was looking at that on Friday of last week, and I didn't pull the trigger because implied volatility is still pretty high. And so we actually sat down and looked at the implied volatility of SPY puts versus calls. And what we found was that puts are actually still higher priced than the calls. So people are roughly by that metric betting on the market going down still. And that makes a ton of sense when you think about it psychologically, because you've had a whole year. I was doing sort of a mental recap about 2022 this year, things I've learned, and I'll probably, like last year, type up a end of year report to subscribers, and just like I did, see what I got wrong, see what I got right, a little bit of keep myself accountable. After about a year of having all this down movement, a lot of people are starting to really flip bearish. I mean, people are always FUD, but now as it matures, this bear trend matures, more and more people are just assuming that the world is actually coming to an end. Recession has been on everyone's lips. Everyone just assumes that's happening at some point in the future. I don't know if that's the case or not. We will see. The economic indicators tell us that the economy is still strong. And that's why interest rates are going up, because the Fed is still trying to control inflation. And that's what's still driving the market. So TLDR, this week we held a key resistance. I'm going to say going into next week, stock market bear. That's what I'll say. Let's see if we have any. If you have any comments, if you have any questions, if you need me to slow down and explain something better, just let me know. Just let me know. And if you're catching this late, post some comments or join on the Discord. I don't charge for it. I just like to share ideas and hear other people's ideas too. Never know when someone might have a really good investment thesis that I might want to jump in on. All right. Let's talk about crypto. So last week, one of the things that I talked about with Bitcoin, I went through in the latter part of the live stream, I went through a breakdown of, I wouldn't say my Ichimoku breakout strategy, but the Ichimoku daily breakout strategy that I use to really say if Bitcoin is bullish or bearish. Real quick recap. If you just look at Bitcoin over the last several months, since August, you have on the daily, you have the cloud, which sets up as a dynamic sort of support and resistance. And August, when we had that move up in everything, stocks, crypto, etc., it came up and held the top of the cloud, did not break above it. We did not get that. Not only am I looking for price to get above the cloud, but I'm also looking for momentum to get above the cloud too. Momentum is this purple line. Let's just go back in time in here and just see what that looked like. So momentum is in TradingView called the lagging span. In the Ichimoku original text is called the Chikou, Chikou. I'm probably pronouncing that wrong. But what it is the closing price of the price right now shifted backwards 26 bars. And what that does is give you extra confirmation of the trend. If price gets out of the cloud, you would say the price is bullish. But you may need a little bit of extra time and or price movement to get that momentum out as well. And that's the key. And that simple confirmation keeps you out of false breakouts. Now, there was a potential false breakout that happened right before this FTX move that happened. So let's go forward and find it. So right here, I made a post about this on TradingView. Price poked its head above the daily Ichimoku cloud. I wanted people to be aware of it because the next step would be for momentum to get out as well. And what that would look like is price also getting out to here. This would be your confirmation of price and momentum getting out. There's a bullish trend. But you have to wait until you get both of those to happen before you can say, okay, this is the start of a bullish trend. And the reason you wait, the reason you're patient, is because of situations like this. Because even though it poked its head out, it wasn't fully confirmed, and you would have saved yourself a lot of headache by waiting patiently. So what I'm waiting for now is for price to get out above this key level right here. This is the same level we talked about last week, from the high before the FTX news down to the most recent low of 15,487. Wow, how many people thought that Bitcoin was going to get there? I remember all through this year when I was trying to convince people the bear case of crypto, that the cycle has rotated over into a bear market. They told me that never has Bitcoin ever dropped below its past all-time high, as if that was a law. Well, it was not. And the past all-time high being about 19,000. Well, here we are. That just goes to show how narratives can be very, very dangerous. So this level right here, let's call it 18,400, is going to be the key level, just like I was looking at the S&P 500, just how I was looking. Let's clean up Ichimoku a little bit right here. Or let me see if I can find the time frame. Yeah. So just how we had a move down this week on the swing trading time frame, a 2 hour of the S&P 500, it came up, it basically made a bottom. Let's start from the beginning. So it made a top, then a bottom. Actually, let's see if I can better illustrate this for people. Hold on. It's a little bit of research I'm doing on MicroStrategy. Oh, that is Bitcoin. Okay. Daily. Can we do this? Okay, yeah. It won't mess me up. Ichimoku. Boom. Okay. So just as I am analyzing the stock market on a lower time frame, more of a closer look to what's happened in this weekly time frame. Well, I'm using the 2 hour to really fit the bars into a view going back to the beginning of December. Okay, so I'm using the proper time frame to analyze this segment in time and price action. It's very important, because here's the real trend down that started from December the 1st on the stock market down to the low that we made on Wednesday of this week. And then here on the daily, where we're analyzing a few months of price action going back to November the 5th, we're going to look at the high before the FTX debacle down to the low that we made on November 21st. And so we had a key level that set up at the 50% retracement of that high to low trend on the stock market. And I'm going to use that same price action analysis to say that here's the key level, this 18,400 on Bitcoin. And I would actually assume, based on last week when I was talking about this, that when we held this support right here, we had a little reaction off the low. Let's just actually dig down to that. Hold on. Because this is why I look at this the way I do. Because number one, you can definitely see where price respects that 50% level. It does it all the time. Not every time, but a lot. That's why I base my trading based on it. And then on Bitcoin a few weeks ago, down here where we had this low on November the 21st, if I zoom down to a lower time frame to make it a little bit more clear, let's see if I can find Ichimoku to back it up. There we go. So here is the proper low, the lowest low that's happened in the last couple of months on Bitcoin. And then you had this rise in price off of it. Okay, so what we're looking at here now is, let me find the rectangle for it. Boom, there. So there's our trend. There's our reaction, as I like to call it. So I look for these kind of little reactions off of major highs and lows. And then I'm going to base a price action analysis on what happened here to bring us off this low. Hey, what's up, Jen? Thanks for joining. Yeah, today is it rainy there with you too? So it's today in Atlanta. It's raining and overcast all day. It's a good day to sleep. So I'm in the live stream chat, by the way. Or are you talking and just chatting? Okay, well let's just talk and just chatting. Sending prayers out to Judy. Where's the pray thing? Okay. All right, back to topic. So you have this reaction level right here where you're going to look for price to recover from that low. And then we don't quite need Ichimoku for this. You can see where from the low to the high, we're going to look for a 50% retracement of that action. So let's pretend like we don't know anything that happened in the future. We're just going to focus on this right here. Okay. This is our low right here. And like always, guys, if you think I'm going too fast or you want me to explain something else and you're watching this live, just stop me, say something in the chat. If you're catching this later, ping me on Discord. The links are below. Don't charge for it. I just like to talk about this stuff. I love to have ideas from other people too. And I learned this from someone else, and that's why I teach, is to give back. Share things that I think are useful for actual analyzing price action. So going forward, this is where we hit the high. So this right here, as we go into, let's say, the latter part of Thanksgiving, this is around Thanksgiving, we can say this is the low that Bitcoin made on November the 21st, and then this is the high that it made coming off of that low. So here's the reaction trend, if we want to call it. So let me even add that to it. So we'll call that the reaction trend. And so what we're going to look for is the 50% level of that trend. Like, what's it going to do when it hits that level? What is it going to do? Oh, there it hit it. Okay. And you see how it kind of spikes and spikes and spikes? That's signs that buyers are stepping in and starting to buy this up at this level. Where Ichimoku comes in and why I use 50% is because oftentimes you can find where that's represented by the cloud or one of the Ichimoku lines going flat, because the Ichimoku lines are the halfway point of highs and lows for whatever period you have Ichimoku set to. But keep my chart nice and clean. I just remember that lesson from studying Ichimoku for many years, and I just try to find the exact correct 50% level. And so I think also in addition to this, I don't think that this gave a spike indicator, but this is a really key proof of concept for what I like to see in terms of, at a level, this being the level, support level, and then you have like a decision bar right here. I don't study the candlestick patterns. I don't know what all their names are. All I know is that you have this really long wick that broke that low and then went back up, basically made the shorts panic and get out of their position. And so we held that low right there, and that has been a key defining level in the recovery off of that November the 21st low. And so where we come to today is a similar situation. Oh no, I don't want to delete. I got all that research. Let me just clean this up a little bit right here. Oh, actually, I know what we can do. Object tree. Boom, 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 boom. Yeah, there we go. Okay. So I love TradingView. So on Bitcoin, once again, here's that major trend, okay, from the high to the low. And so here is the 50% level. So this is going to be that defining level that we're going to look for to see, is this going to be the level that it holds or breaks? Now, in the interim, there was an actual, I say all this, I say that, oh, Bitcoin is looking bullish up to this level, but I couldn't ignore a setup that I saw today, right before the news. This right here, this spike. This actually happened before the news this morning, and I just could not take it. These kind of things I cannot take, because those that are, long time Bitcoin chart analysts will recognize this pattern right here. Do you guys recognize this? Do you know what pattern this is? This is, of course, the classic Bart Simpson pattern. Very popular in trading communities, the Bart Simpson pattern. Right there, see? So people are very aware of the Bart Simpson pattern in the trading communities. And I've posted about it many times, actually, on TradingView before. So you got to be aware of it. Is it bullish or bearish? Well, in this case, it's bearish. But it also sets up in the context of, here was the trade, by the way. So basically a short here off of 8 a.m., stop above the high, and then we're going to try and take it back down to here, just be a little aggressive on it. But it's also in the context of what could be seen by some as a head and shoulders pattern, with here being the head, left shoulder, right shoulder. And so coming back to the neckline is the first thing I'm going to look for. Even though I think, broadly speaking, Bitcoin could be making recovery up to about 18.4 in the short term going into this weekend, I think there's a little bit of money to be made going short on a day trading cycle. And I made this note too that my spike indicator is kicking off a lot in this pattern because volume has dried up so much in crypto, and things are getting a little boring for people. I think last week I talked about it, but I went to a Bitcoin barbecue and meetup I've been going to since 2013. And we're down to our bear market turnout, where it's just that little collection of a dozen or so hardcore Bitcoin enthusiasts I've known for many years. And we sit around and talk about bull and bear cycles of old and how this time is different, of course. I actually had a thought about that today, because a lot of people, they ask me, well, where do you think the bottom is? I think they ask me that for a lot of reasons. I think one of the main reasons they ask is, number one, what's going to happen to their bags? Or is Bitcoin going to go to 300,000, 800,000 like they were promised anytime soon, so that they can pay their bills? In a lot of people's cases, pay their taxes that they owe from 2021. That's hurt a lot of my crypto friends who maybe they did store it away, but they made so much in capital gains in 2021 that they're having to then pay taxes this year with the cash, rather than having that cash available to buy a dip. I think a lot of crypto people I've talked to are starting to accept that maybe possibly, let's go back to this chart, maybe possibly Bitcoin could, in time, come all the way down to 10K. And the logic behind that is simple. In Bitcoin's history, there's been 4 prior bear market cycles, and they've ranged from minus 75% off the high down to minus 85% off the high. And so the minimum number that I was looking for Bitcoin to come to was going to be 75%. And that actually ended up being that low back in June. That was the minimum bear market cycle that we were going to experience, in my opinion. And nobody really wanted to hear that back in the 40s, when everyone thought that this was a buying opportunity. Again, going back to the Ichimoku breakout strategy, if you pay attention, price flirted around at 36,000 for quite a while, never broke below the cloud the year before, never broke below it on the weekly now, below it in the beginning of the year, January through February. But right around the time of April of this year on the weekly, you actually ended up getting that confirmation of price and momentum getting below the cloud. And at that point, no matter how bullish you were, no matter how much you thought that the Federal Reserve was going to put Bitcoin on their balance sheet, from a technical standpoint, you should have been out of Bitcoin. And this works on the opposite side too, because back in, yeah, so I mean, there you go. That's what you ended up happening if we play that out. So you knew in April of this year, just based on Ichimoku, that the trend, the bullish trend, had ended, and you now had confirmation of a bearish trend. Now, just like on the daily, if we get back above that 18,400, we're trending on the daily. But to get trending on the weekly again, it's going to take a lot. It's going to take a lot to get us all the way back to here. It's going to take time. It's going to take price. It's probably going to take a lot more time than people expect. But that works on the opposite side too, because when we had the COVID low, the COVID crash, price was again below, and all you had to do on the weekly was be patient and wait for that confirmation for price and momentum to get back above the cloud. You could have done it on the daily, but the weekly was your true long-term confirmation. So 11,000 Bitcoin was really what you wanted to see. 11,000 is actually an interesting number too. Let me bring something up real quick. I was going through some old pictures, and I saw this meme from, I think, around this time in 2020, where there was, of course, that big debate at the time. This is, imagine, this is before, we had this big bull run where, price of Bitcoin was still, kind of hanging out. It wasn't really up to moon levels. You didn't have Michael Saylor doing podcasts about how you should mortgage your business and your home. At this time, the word on everyone's mind was inflation, inflation, inflation. Stimmy checks were coming out. Interest rates were super low. Housing was going up. Inflation was what everyone was concerned about. And the historic hedge against inflation was, of course, gold, going back since history began. But this new, young crop of libertarians saying yes, were saying that Bitcoin was the answer to inflation. And that was the debate. And yeah, gold bugs have always had a certain, well, think about Peter Schiff. They've always had a certain ire towards Bitcoin enthusiasts because, honestly, my opinion, the people putting their money into Bitcoin are not putting their money where they would have historically into gold. The same kind of people that were really concerned about the world ending, the dollar failing, etc., those type of people that were very susceptible to FUD, fear, uncertainty, and doubt, would buy gold. But now this new crop of young people, what are they doing? They're buying crypto. Didn't work out for them that well. But going back to the Bitcoin breakouts, again, you had that situation where price got above the cloud at the same time the momentum did, around 11,000 Bitcoin towards the summer of 2020, and it never looked back. And so being patient would have had you buy Bitcoin at 11,000, and you would be up about 50% right now. You'd be up about 50% on your Bitcoin right now. Pretty good return given 2 years. I mean, if you ask anyone, would you like to have a 50% return in 2 years? I think that most people would say yes, although I'm sure there's some that would say that is not enough. But those people where it was not enough, I don't think that I think they would be happy to have 50% instead of minus 50%, which they probably realized chasing bigger and bigger gains. And of course, here was the main reason that it all ended, technically speaking. If Bitcoin was going to go to 300,000, this bar right here, this November of 2021 bar, that would have been a nice, big, solid green bar to close above that high. As it stood, you did not get a close above the prior all-time high in October. You did here in November, but that was a really, really weak break. Really weak break. I mean, I started making my top calls on this bar right here. And of course, what did it do? It did what markets oftentimes do, which is fake you out a little bit. But it really should have had momentum. I mean, look at this kind of price action here. When you have something going up with strength, it doesn't give you any question. Everyone's jumping into it. But if it was going to carry on, it should have gone with more force. So, what does the future hold? Well, let me go back to a video that I made February of 2021, coming up on almost 2 years ago. And the title of this video was What Kobe Bryant Told Us is in regards to GME. Why does this matter? Well, we'll talk about it here in a second, but let me play through and add a little bit of commentary. Again, by the way, if you have any questions, if you have any comments, post them in the chat for me. I'd love to talk to you guys. If you have any symbols to look at, let me know. And plug Discord. I just want to talk to you. Come hang out and let's trade together. I'm in there every day trading futures. What's up, traders? So let's talk about GME. Now, if you're a bag holder, I'm sorry. You paid several $100 for an education. Think back to the mood of early 2021. Everyone was super excited to be sticking it to those hedge funds by buying these most shorted stocks. Or excuse me, that's how I perceived it. It was a short squeeze, and what was going on was there was a lot of short interest in these companies that were not doing very well. I mean, it's a brick and mortar game store in the era where people download their video games. It made a lot of sense to short it, but then again, what made sense does not make sense. It really doesn't. Narratives are so dangerous. If you remember also that 2021, the narrative was cash is trash, buy everything you can with your dollars, and then this year the dollar has been the most one of the best performing asset classes. There's no rosy picture really to be had, but you will have a chance at hope. See, what I was trying to help people here is to understand that no, you're not going to get whatever price you wanted. This was all you were going to get. This hype cycle peaked out, and that was going to be the peak. And I'm going to show you where and how, if you're smart enough to take it. Let me first read something from the late, great Kobe Bryant. You'll be surprised how often people do the same things. And if you can learn people's patterns and you learn their tendencies and habits by watching them game after game, you'll see that they do the same things and you can take advantage of it and you can manipulate that. That's the whole premise in trading to me, is recognizing patterns that repeat. And when it comes to investing and being a contrarian, seeing where narratives go wrong. You know, there's this big narrative around GME. There's a big narrative around all these short squeeze stocks. And it worked for a time, but if you were on Wall Street Bets and you're reading that forum, they were still trying to pump it to the moon, to the moon. That was their chant. That didn't work. It did not work. And it was kind of apparent to me at the time it wasn't going to work, but not to the people that had their money in it. Because there's this cognitive dissonance that if they look at it at the possibility that, wait, this is not going to work, this money I put into it is not going to give me the returns I want, that's a little bit difficult for people to entertain, and so they didn't. That is so true for trading, because these patterns repeat themselves time and time again, these hype cycles. I feel like I'm watching reruns. Let me show you what I'm talking about. Let's go to another favorite from last year, Genius Brands. Even that chart looks the same. This is a daily chart of Genius. It's recently had another pump, but this is not the big pump. Let's zoom out a little bit. There we go. So this is a classic pump and dump cycle of pattern that I've seen in so many things, going back to different tech stocks, when you're penny trading, if you spend any time penny trading stocks, you're going to see this kind of pattern happen. You'll have a few days of really wild action to make your money, and then you can't be left holding the bag. It's musical chairs. The music will stop. Last year, in June, this was when all the hype and all the rage came. Popped up, what is that? Something like 3,000%. Let's jump back here.
It's a lot.
What was the percentage gain here? Something, yeah, 3,000%. So what this tells us about the hype cycle, because people repeat the same patterns, is that we are somewhere in this range right here. We're in the bleed out, the despair. Now here's the bleed out and despair as I'm speaking about GME in February, the month after this. What you're going to get squeeze. If you're bag holding, you're going to get a optimistic, hope-giving pump day within the next 2 weeks. That is going to be your opportunity to get out at less of a loss. And I was able to see this happen in real time on Genius Brands because I was trading on some discords with people that were really drinking the Kool-Aid. And I remember watching this day by day as they were going through this. And then we had this particular day. It was a huge day where they were all very, very happy that, oh, finally, it's coming back. It's coming back. And, well, we had the benefit of hindsight to see what happened from that. If you ignore it, if you get caught up on the hype that this is going to be your opportunity to make it all back, or if you're trying to shoot for break even, no. Be real. What's going to end up happening is, following that months to come, is the slow bleed. People are just going to be bled out until no one's looking at it, and some institution, some group of traders are going to illustrate some short pumps over the months when no one. So because this stock was so shorted, because it was just kind of the rage to pump these low liquidity stocks, what you're seeing here in January and February of 2021 on Genius Brands was some people coming back in and trying to pump the stock. And that's what you're seeing, this pump right here. No one's looking at it because people still remember it. People are still bag holding. There's still interest out there.
There's still some people out there I know that have
take
Genius.
that as an opportunity to jump back in and recover their losses. All these things are going to play out just the same way. But watch over the next 2 weeks. You will probably get an opportunity for less of a loss. So I'm saying that about GME. Look over the next few weeks after making that particular video, what happened. Now let's go back and look at it. Let's go back and look at GME with the full benefit of a whole year of, more than a year of hindsight. Almost 2 years of hindsight now. Yeah, Jen, you had a, well, that's good. That's good that you still have it. Here's the thing. That's what I was thinking about this week, Jen. I was thinking about all the people that were still holding Bitcoin, because I went and had a good workout yesterday with a friend of mine, and he said he still owned a lot of Bitcoin, and he was saying, like, what should I do? And I don't want to tell people what to do. I will say what my opinion is, but I'm never going to be prescriptive in you should do this with your money. That's not the position I'm in. Nobody's paying me to do that. I don't want people coming to me and saying that they either made money or missed out on money or lost money because of something I said. No, these are my opinions. If I say that I don't like something, if I say it's going to go down, I believe that. But what you do with that, this person on the internet telling you, is up to you. You have to take responsibility. Don't blame me. Blame yourself. You're the one that pulled the trigger. So on GameStop, let's clean this up a little bit. So right after I made that video, I think I made that video on February, what was it? It's February, details, what date is that? I think it was like February 21st. February 4th. So February 4th of 2021, I made that video. And I told people, hey, you're going to get a second resurgence. You're going to get a second shot here to recover some of your losses on GME. And sure enough, towards March, you got exactly that. You got a pullback there. Now, interestingly enough, did that hold the weekly? You had a little close above it. But you had a little pump, and then you had a second pump as well. People really, really, really wanted to try to get this back up to whatever price they were trying to get GME. I think they had even stock split from here. I think it topped out at 500. I don't know what they were looking for. Notice this right here. No, you see how I drew that 50% from the high to that low? Look at that right there. Look at those boom, boom, boom. That was your last chance. Your last chance was to get out at 65, which I don't know what the pre-split price would have been, but assuming that people bought it, somewhere in this big green bar that week, you had a chance to come out at break even, but nobody really wants break even unless, well, it's down by about 50%. Then you wish you could get break even again. But the key thing I wanted to reemphasize was that same thing I talked about in Genius Brands happened in GME. This all ties back to Bitcoin. Let's turn this off. All right, so where do we stand right now? So this is on the weekly here. You had that price right there. It's still higher than January of 2021. It's funny because the people that own GME, the hedge funds that bought into it, they're still actually above where they got it. Interestingly enough, there's still a lot of bag holders here. There's a lot of bag holders in Bitcoin too. So what's happening in Bitcoin reminds me of the post-2017 run. And essentially what you had was this high in 2017 with Bitcoin and a fall off into a bear market cycle. Now, oh, by the way, first it held that 50%. Okay, that's not exactly a good example. So in that bear market cycle that went along, I was, of course, here with the people that were, trading it back then. This was before really Discord took off, so there weren't Discords there. There were Telegrams. But it kind of got into this really long, multi-year malaise of boredom where you would have these pops up, these little resurgences of hope. And people eventually thought that Bitcoin had found a bottom. There's a nice little fake out right there. And then you had some big action. I don't even think this was based on news, where Bitcoin halved again from 6,400 down to 3,000 something. So when everyone thought it had found a bottom, it still had 50% more to go. Now this time it's different. No, it's not. But the key thing here was, as I sat here watching, then Bitcoin, once everyone's out, everyone's bored, it finally had a resurgence. It had that second opportunity, that second gasp for people that had lost money or on paper or real back in there. And it actually came up very, very high, all the way up to 13,000, which was almost halfway of the big 2017 move. And a lot of people started jumping in. I mean, now if they bought it at 13,000, they'd be up about 20%. But in the short term, that was more of just that fake post crazy parabolic move hopium rally. At the end of the day, you still had COVID to come up. And what did COVID do? The COVID low took you all the way back down, just totally unexpectedly back down to these lows, right around, I believe, into almost the 3,000, about 4,000 Bitcoin. So what I want to caution people against now is what we're probably going to get in Bitcoin, even if we get above that 18. If we were to go into a bull cycle, which is entirely possible after we bounced off 17, if we were to start to get into a bull market, I want people to be very cautious. I think a lot of people I've talked to that want to buy Bitcoin, they still buy it thinking they're going to get that $300,000, $1 million Bitcoin. I hope so for you. But what's more likely is you're going to face the same kind of uphill battle, the same kind of post-hype cycle that penny stocks and hype stocks and even Bitcoin itself faced in its history, where you have a fake out, a fake bullish move that happens over a long period of time that gets everyone talking about it, everyone jumping into it, and then it just doesn't follow through. And then you'll still get an even better opportunity coming up. So be very, very cautious. If you're a trader, if you're willing to go in and out, you'll be okay. If you're willing to hodl for years and years and years, as people say they're able to, then you'll be okay. Again, if you bought in this hype cycle, if you bought in this late stage 2019 false trend, a lot of people thought it was going up from that point. If you bought there, you'd be okay today. But even though you would today, from that fake out, almost 4 years later, you'd be up 50%. You still had to endure a drawdown of about 50%. That's the real return and risk on Bitcoin. It really is. It really is. Over the long enough timeline, you need to assume that you're going to lose half your value. And over the long run, you can assume that you're probably going to make 50%. It's kind of cool how it works out that way. But the reason I say that is because I think that is a much better perspective for people to have than this idea that they're going to put $500 that they earned into it and then retire in a year. And that kind of foolish thinking is what created this wild exuberance and created a lot of heartache in people that jumped into it in the 50, 60Ks because some eloquent person on a podcast told them to. So I hope you guys can make some good decisions based on that. All right, we're coming up to the end of the live stream. If you got some questions, first of all, thank you for joining. If you got some questions, some things to look at, I got some things to look at right here. Post them in the chat while you still got me. Can I look at HLF stock? HLF is Herbalife, is that right? That's is that Herbalife Nutrition? Well, I'm sure you know if you're asking that Herbalife was a big, big PR thing with Bill Ackman and Carl Icahn years ago. For those that don't know, Herbalife is a multi-level marketing company. And Bill Ackman alleged them of being, I don't know if he said outright they were fraudulent, but he definitely did not like multi-level marketing and the fact that, multi-level marketing, multi-level marketing pyramid of returns. It's, let me see if I can find the image of what I'm looking at. Yeah, so really and truly most MLMs look something like this, where you have the top 0.1% of people that make really, really good off of them. You have, basically the top 4% do pretty good. It really operates under a bell curve distribution almost, where, that 2 standard deviations, really good, 1 standard deviation, but then everyone else to the left side of the curve is not making money, not making money. I think that's what he was going on. And the fact that it was a publicly traded company, wanted to short it. And he wanted to short it going back, and this was back in 2011, 2012. Let me be sure on this. So, Bill Ackman, Herbalife short. There's a whole documentary on it from 2016. finally he capitulated in 2000. Wait, that's updated in 2019. In 2000, let's see, let's bring this up here. He launched his crusade against Herbalife in 2012 when he put a massive bet against it. And then he got 20% on it. So he was short the stock. But that puts him in a very dangerous position, because if he's shorting it back in 2012, I think it was around here, okay? And he got good on it, but I think by around, let's see, when did he? In November 2017, its stock skyrocketed 51%, forcing him to change his approach. He closed out his short position and converted it to a put position. I wonder what the dates on his puts were. So that he is a very long-term, big investor managing billions of dollars, I bet he would probably have some very long-dated puts. I would be curious to know what his, if he still had those puts going into this year. Because if he started taking puts in 2017, 2018, around 50, and now it's at 12 and 12 and a half, yeah, that's, he's probably done pretty well. I don't know if that's the detail you really wanted, but that's what I know about the stock. Now, from a technical standpoint, it's interesting the level it's come to. You can see that confluence there around 12 and a half. Do I want to buy this stock to hold it for the long term? Probably not. But do I see it has finally come down to a level where it's cheap? Yeah, definitely so. So I think if you were looking to go long this stock, now would be a time to look for opportunity. I don't see anything on the daily just yet. You know, what I would want to see, based on any analysis, is a pullback to, yeah. Well, here's what I would look for, Dexter. You know, and I talked about this earlier. I don't know if you were here in the live stream when I was looking at Bitcoin and the analysis of Bitcoin. Essentially, with Bitcoin, to do a quick recap, I'm looking for Bitcoin to recap this level, which is the 50% of the leg down. And once it recaptures it, then I can say, okay, now we might have something going on long. And the reason I'm patient to wait for something like that is because if you look at Herbalife, if you measure out, let's just do this. Let's just measure out every down move for the last year. Really good. Actually, this is a really good learning example. So if we measure out every down move this year, big down move, okay? So we have this earnings dropped it to here. You know, price, are we going to buy it here? I'm not. I'm going to wait for it to recapture 38 and do that. If it does that, maybe I'll consider long, but we never got that. So now we wait, and we don't take that loss. We don't take almost a 50% loss by being patient. All right, we got to move up. We got to move up. Now let's see, and notice again, this move up right here still, if we measure it here, did not come up to do that. So again, we still don't have that capture of that 50%, and we avoid this loss. And then we have this next leg down right here. Are we going to get a capture there? Are we going to get it? Are we going to get it? No, we saved ourselves another loss. And so however you slice it, whatever time frame that you're looking at, let the market give you a confirmation. Let this come back up to a 50% retracement of the leg down. I mean, you could either measure it in the short term right here. You could either look for it to come to a 15.15 and maybe hold there and then go up. That would be a good opportunity. Or you could look at it more broadly. Let's say on the weekly, you could say, okay, here's the last leg down here. I'm going to be patient. I'm going to see if we can get it back above 21. Here's a nice confluence right there. So either wait for it to get back above 15 in the short term with a lower, keep a stop in place, or see if you can get it back above 21. And so once you get that kind of confirmation, I really, in the longer term on the weekly, again, I don't think I really want to own this company, but from a pure technical standpoint, if I didn't know what it was, if I was completely unbiased, I really would like to see some kind of a recapture here. Basically everyone's faked out thinking it's going to zero here. And if you can get it back up to there, maybe it could be a good long-term bet. But again, this is the weekly, and it could be a few years for this to bear fruit. All right. All right. Bass Koenig is trading PHB Red Pulse Phoenix coin. 255 days. That's 50% of the time in between. Okay. All right. Oh, I would be remiss if I didn't plug my favorite crypto right now, which if you look on this list right here, just on any given day, on any given Friday, what's the green thing you see on my list? It's Monero. I'm going to close it out on this, actually. Wait, what's 12K? Oh, yeah. Okay. I keep pointing this out to people. No matter which way you slice it, Monero is a privacy coin. It is being used on the internet for exchanging goods and services where people value privacy. Bitcoin is not private. Bitcoin is what it is. It's very popular. They're trying to develop on it a lot. But yesterday, again, in my discussion with my friend, he was complaining to me that he was down about 10K in paper money on his crypto. And I said, well, I know this doesn't help you now, but if you had your money in Monero this year instead, you would only be down. Where's my January. You would have about 82%. You'd be only down about $5,000. Monero versus Bitcoin continues to outperform, and even Monero XMR ETH for this year continues to perform. It is one of the best performing cryptocurrencies this year in a bear market. Now, what that means in a bull market, I don't know. But what I do know is that it is proving itself to be a store of value. And if we do get a bullish cycle in cryptocurrency again, it will benefit. It's also very useful. Go try to spend, go try to buy something for $20 with Bitcoin. Sure, you can do it on Lightning Network, but that's a whole other debate. I don't want people to ignore this. I want people to pay attention. I want people to be aware, because a lot of people are setting their limit orders on Bitcoin and Ethereum because that's what they want to repeat. That's what was the popular thing for the last cycle. And I'm sitting here telling you guys what is performing now above those two prominent coins. And this isn't a privacy coin genre thing either, because Zcash, the next most popular privacy coin, looks a whole lot different. It looks a whole lot different. So Zcash versus Bitcoin is not doing nearly as well. It's down. Let's see, what is Zcash versus Bitcoin for this year? It's down. It's underperformed Bitcoin by about 15%. So you would have not been better off having your money on Zcash. Zcash is another privacy coin. And really what crystallized this was a presentation a person gave the CEO of Edge Wallet, which is a phone crypto wallet platform. And he said that they had taken a lot of extra steps to integrate privacy coins like Monero and Zcash into their platform, which is hard because privacy coins are very convoluted to maintain privacy. You can't just do them as easily as Bitcoin, for instance. And he said that the two most popular coins on his platform, on the exchange where people buy cryptocurrencies, the two most popular coins are the same two most popular coins I've seen people using on the internet to buy and sell goods and services. And that's Bitcoin and Monero. Not Bitcoin and Ethereum, not Bitcoin and Litecoin, not Bitcoin and Solana, Bitcoin and Monero. And so I really don't think people need to ignore this. I really don't. And that's my piece. So thank you all for joining me. Please come join the Discord and hang out with me. I trade ES and NASDAQ futures there every day and post my trades as they come in. And I just like to hang out and talk ideas with people. Look, this bear market, this malaise is going to come to an end eventually. And then when everything's flying high, people are going to come back and they're going to want to trade. Why not try to get in early with some opportunities? Let's talk about it. So have a good weekend, everybody. And we'll talk more about the Santa Claus rally next week. Bye-bye.